Welcome to this Bell Direct weekly update. I'm Julia Lee, an equity strategist at Bell Direct. And after what's been a horror month for markets in October, the market is bouncing back this week. We've seen the best weekly performance for the Australian share market in 2 years, with a gain of about 3%. The best performing sectors this week were the healthcare space, gaining more than 6%, and the tech sector, which gained more than 5.5%. Also helping the market is the fact it seems to be raining cash at BHP Billiton, the company planning to return $10.4 billion to shareholders off the back of its shale gas asset sale. The tax component on both legs, the off-market share buyback as well as the special dividend, is especially good for Australian investors as it distributes maximum franking credits. However, the last day for shares to be acquired for franking credit entitlements has passed, and that was the 1st of November, so hopefully you were holding some shares on that date. Let's have a look at UBS, which is concentrating on the real estate space, in particular the office sector, saying that investors' expectations for rent growth in Sydney and Melbourne have been pushed upwards from 10% at the beginning of the year to 12%. UBS's view is that return on equity has peaked, and it's unlikely that investors will price in the uplift in net tangible assets in the absence of takeover activity. Their favoured office play is CMA on the back of relative affordability of suburban office space and the exposure to infrastructure rollout, followed by GPT, which has the highest portion of premium product. But they retain sales on Mirvac. That's because the residential slowdown does seem to be accelerating, and also Dexus on the back of valuation and the office market peaking. Of course, it was a big week for the banks. ANZ and NAB in focus with their full year results. And having a look at what the brokers have been saying so far, they're all buy, outperforms or accumulate recommendations. We should see some strong support ahead of ex-dividend dates, which for ANZ is the 12th of November and for NAB is the 8th of November. Morgan Stanley looking at commodity prices, and in particular having a look at spot prices versus equity prices. They've run the spot and currency prices up to the 2023 calendar year and then switch to longer term base assumptions. The best one is Syrah with a spot price of $2.70 but a current trading price of about $1.77, which means more than 50% upside there. And the worst is Western Area's spot price of $1.35 versus the current trading price of $2.37, which means downside of about 43%. Having a look at Macquarie, and Macquarie is saying that gold has recently remained relatively strong, and that's been helped by the equity turbulence that we've seen. Non-farm payroll numbers, which will be out tonight, will be key, but in terms of the producers, their top picks are OceanaGold, Saracen, St Barbara Mines, as well as Resolute. In the developer and exploration space, they like Dracian, Gold Road, as well as West Africa. Having a look at Newcrest Mining though, where they have an underperform, saying that the first quarter result was weaker than expected and it was a weak start to the year for Newcrest. For Northern Star, they have a neutral, whereas for Resolute, they have an outperform rating there. They say that they expect their production outlook to improve from here for Resolute Mining. So all in all, it's been a pretty tough October. Most traders and investors will be happy to turn over the books onto a new month. And so far, so good. We've been off to a positive start for the month of November. And in fact, we've clocked up the best weekly performance in 2 years. I'm Julia Lee, an equity strategist at Bell Direct. Hope to see you next week.